This is our Forex blog for October 14th, 2011. And like most days, we really want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong, depending on which currency is on top. The yen's always on the bottom, so if it's weak, you want to find the strongest currency to buy versus it. And usually the euro's, I believe the euro's on top of all the pairs, so if it's strong, you want to find a weak currency to sell it against, like the yen and the dollar. We have the real-time strength or weakness in histogram format. This is made up of multiple different tools that show both the direction that the dollar is going to and also the intensity, both bar by bar, short term, 5 minutes, and over the last 30 or 40 minutes, the intensity of that trend. So anytime you have a red reading at or above the 80 level, you know that the vast majority of dollar pairs are going down, and they're doing so with intensity. Trading a currency that does not have an intense strength is pretty much like gambling. It might continue down, or it might reverse up, or it might also go sideways, which is, just as bad. You're wasting your time. But when you find a currency that's pretty much red on all time frames, in this case, except for the monthly one on the bottom, same thing with the yen, you want to trade that against the strongest ones. Now, the Australian clearly is the strongest consistently through the day, and it also is the strongest on all time frames. The euro had a little bit of strength here at 1, and it was probably the second most strong when you look at the longer time frame trends. So let's look at buying the euro dollar, buying the euro yen, buying the Australian dollar, and buying the Australian yen. Here's the euro dollar, and one of our filters to avoid unnecessary losses is above the hourly moving average, a gray line in the middle. You want to look for buys because it's more likely to go up. And as you can see today, because our currency meter also showed it to you, you could use our trailing stops as your entry and exit. You have a nice small in here around 53, out around 70 for about a 20 pip win, in here at 70, out here at 95 for 25 pip win. And notice where it stalled, right at a resistance area. So you know these ahead of time, and you certainly can use those as places to exit half your trade and the other half when the trailing stop gets hit. When a currency is trending up and it comes back to the hourly and finds support there, it's usually a pretty decent place to go long again right here. So from 57 out at half at this resistance area, previous day's high got hit. You have a huge profit on the first half and a smaller one on the second, using our trailing stop as an entry. Again, small, decent profit on there as well. Now let's look at the euro dollar on a range chart. This is a 5-minute chart using our intelligent, sophisticated trailing stop. We also want to look at this on a range chart, which also gives you a little bit even clearer picture. Here's the euro dollar today on a range chart. So on this, there's quite a few trades. When it went from underneath above the hourly here and went sideways, you could have went long, very small profit. Buy this little pullback right here. You can see it went from around 65 all the way up to 38.10. Notice this pullback. If you got into a trade here, you have a loss. If you bought this breakout right here, you're in, or this, using our intelligent trailing stop here, in at 59, out at 08. So that's almost a 50 pip win. And a lot of times currencies chop around. You want to wait for a decent sized pullback in here with a small profit in here around 06 and out at 60. So that's about a 55-60 pip win. The range charts really make trading a lot easier. So remember, the euro was strong, the dollar and the yen were both weak. So the euro yen is also a good one to be looking for buys. The best, some of the earlier trades today was when it broke from outside this narrow range pattern. That's usually a high probability trend breakout. And you can see the first trade ended in about a 6 pip loss. You get back in again. It went to a resistance area here. You're out at the second half of your trade right here. Pulls back and finds support to hourly. Nice profit there. If you bought this little pullback here, you pretty much broke even. This trade right here went to a resistance area, the previous day's high. You want to usually exit half your trade there, then the next half when it hits the trailing stop. and it just keeps working its way up. Now remember, the Australian was even more strong than the euro. Here you have a narrow range pattern breakout. The first one fails, the second one has a nice profit. Notice the resistance area right here and in here. It's usually a good idea to exit half your trade at a resistance area. You got a pullback right to the hourly, right to a Fibonacci area. This one went up about 50 pips. Nice little sideways pattern right here, right at a previous day's high, and it breaks out. You also want to use your Fibonacci profit targets to have an idea of where to shoot for. Usually the first or second fib targets, where the market's going to stall at. This one was so strong it just kept going. Let's look at the Australian dollar, which was the last of the 4 best and highest odds trades. You can see this one just kept, forcing its way up all day long. It was above the hourly right here and broke out. Small profit, 25 pip profit right here, 40 pip profit. Again, you have another, if you watch our videos on our site, we have 2 main entries. One's a pullback and the other one's a little rectangle pattern. This is more of a wedge type pattern, but same thing. Anytime you have a trend up and then it goes sideways, when it breaks out, you want to go long. And look at where our intelligent trailing stop got you out, up here at 05. So you made 55 pips on that last trade. And of course, you always want to draw your fibs on there. If it stalls near a fib target, you probably want to exit half of it. So I would have got out of half as it went above the 1.618, and then the other half here at the trailing stop. But the currency meter, all week, very easy trending week, and this is really served you well this week, focusing on the strongest versus the weakest pairs. If you were to trade the dollar versus the yen, which were both weak, first of all, that would be a very stupid thing to do. You never want to buy 2 strong ones against each other or 2 weak ones. But for the most part, look at this currency all day. Up, down, up, down, up, down. It finally one decent sized move. I mean, even though it's only a 15 pip move, but then it comes right back down. Then it's shot up and it's chopping around up there. You want to avoid these. Without our currency meter, you're more apt to trade currencies that are very likely to be choppy, and you're really kind of just gambling.